Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago home office here on a sunny but still pretty chilly Wednesday afternoon. We did have a chance to build some snowmen here in Chicago starting Sunday night into Monday night. Decent amount of snow after what was a lovely Halloween. So winter has hit early up here in the Midwest. But let's check in on the southern areas of the Midwest. Because joining me today from Wichita, Kansas, is the director of Feed Foundations, Mr. Jake Kingsley. Jake, how are we today?
Doing pretty good. We caught the cold edge of your snowstorm there on Sunday. Actually connected through Chicago while it was coming down. Thought I might get stuck, but we didn't. We were down in the 40s for a high there. We made it home. It is in the mid 70s again for the rest of this week, Jim. Pretty pleasant early November.
That is delightful. I think we're going to get a piece of that little warmer weather at the end of this week in Chicago. I got to say, Jake, between government shutdown, travel closures and cancellations, along with taking a solid hour probably to de-ice your plane on Sunday, it's a miracle you flew on Sunday. Well done. Through Chicago.
It was pretty exciting to get home. Pretty close to on time. So happy about that. I guess we're lucky.
Oh, very good. I tell you what, who else is lucky are the folks that were out running those combines a week or two ago. On the episode last week that I ran solo, I was telling the viewers and listeners about my trip up I-29 across parts of South Dakota and how it was gorgeous, 50s, sunshine, blue skies. Man, we were harvesting some corn. Probably not so much this week, but, you know, ideally, we're probably pretty stinking close to done for a lot of folks. I'd have to imagine we got a lot done there that first week or so of November. But the theme lately, and no different today, is that we also just don't know because we don't have those government reports. Perhaps that's changing here in just a matter of a week or so in terms of harvest. But then, as we'll talk about here momentarily, we will have a WASDE this week on Friday. So before we get to that, Michael, if you would please kindly timestamp the broadcast. It is Wednesday afternoon here in sunny Chicagoland, and we did close mostly a touch higher here as we start to inch towards what will be our first WASDE report since September. That'll happen on Friday, this Friday, the 14th. So most likely this episode released on Thursday. You'll be getting WASDE the following day. So let's keep that in mind. We did close December corn up 3.5 cents today, just up over 4.35. So sneaking into the higher end of the range we've been in ahead of that report. The reason I say we mostly closed higher is because you take the deferred delivery months of our corn contracts and you get into the next crop year that starts in September of 2026. Those deliveries all closed just slightly lower today. So we're looking at D26 was down 1.5, holding below 470 at the moment. The wheat market was just up a touch here for December. Chicago wheat was up a quarter, 536.25. No V beans, which will be going off the board in a couple days now. They were up 6.75 at 11.20. Jan beans up 6.75 at 11.34 as that bean market continues to hold some of that buying premium as to what we think we are selling and shipping on the bean side at the moment. We'll also touch on that here momentarily. And then, of course, the meal market, stubborn little byproduct, Deese meal up 5.10 at 3.22. And the one market that was truly across all deliveries lower, bean oil was down 53 points at 50.57. So, Jake, that all being said, the markets are trying to anticipate what we're finally going to see on Friday. We did position ourselves a touch higher at the board today. And one could argue we continue to kind of just chop around this thing a little bit as we move into Friday sessions. Just want to also point out we have a lot of folks bouncing around this week internally at ADPI here in Chicago. So I have an opportunity tomorrow to speak to the ADPI group and hopefully, Jake, do some justice in terms of taking and absorbing your knowledge and echoing it to the dairy industry here in Chicago. But as you also know, I'll probably do a fairly sub-average job at doing that. But when people come back to the desk, it's WASDE time because NAS has been back at work, even though most of the USDA has not been. Jake, I think did the House fly back to D.C. today and have a little vote?
That's what they're saying on the news. Supposedly talking about it and working on a deal or have the deal and voting on it now or very soon.
Right. So we might have the government reopening by the end of this week. The Senate did ultimately pass a version of this bill to then send to the House. So the House is back in session. As we record, we're unsure at the moment, but we'll see by the end of the week. I feel like, Jake, it'll take maybe another week or two. Then let's just say we come back online. The USDA becomes fully staffed and up and running again. It still might be a few weeks here before we see CFTC data, before we see, crop progress data and export sales data. But Jake, as we focus just on WASDE here, what are we thinking about this WASDE report here this Friday?
Well, I think we got to go clear back to September and kind of set the table for where we left off because we've been now, a month and a half without any real information. We're a full 2 months removed from that last WASDE report. And the way that came in, we had a pretty healthy balance sheet, both on corn and beans at the time. I think the argument was that you could afford to lower corn yields down into the mid 180 somethings and still maintain overall ending stocks or potentially even improve them. Because it seems like the demand items over there had a good bit of room to give as well. And so then we caught the September 30th quarterly stocks numbers was the last report that we had before shutdown, I believe. And that sort of implied that certainly there would be some reduction in demand, given that there was reduction in old crop demand numbers and should bring what we have on this new balance sheet down closer to those. So I think probably what we're going to see on Friday is, yes, some sort of decrease in yield. I think the industry is looking for something between like 183 and 185, give or take a fraction of a bushel there. And then my expectation would be that we see an adjustment lower, probably in the feed demand and maybe in exports, but that one's been pretty hard to figure out. I would lean more heavily into feed, coming down potentially a couple 100 million bushels. I think they could justify it and pretty well offset the supply and demand shift there to come in still 2 billion and change in ending stocks. I think the industry right now is projecting maybe even a 2.3 billion bushel ending stocks number, but it's hard to know how they're backing into that math with everybody flying blind for so long.
Yeah, I think again, so what we're going to see on Friday from WASDE, a lot of those numbers are derived from, multiple agencies right across the USDA. And so the only one that has really been running full speed since the start of this month, and full speed is probably a stretch, but that would be NAS, and NAS handles crop production, a lot of the production side, the supply side. So they're going to have about a week to 10 days or so to really put together a strong yield number for this report on Friday. And I think you noted, Jake, the industry sits somewhere around this, is it 182 on the low end to a 185 on the upside? Kind of hard to gauge exactly how things ended up through October and early November, but I'd say anecdotally still, most folks we spoke to that got some of that early corn out that maybe had some disease pressure, once they've gotten to that second round of the good stuff, people have been very, very, very happy about what they have, and also had been very happy about the silage that had come out of the ground as well. I think the point where, Jake, we talked about having maybe even higher grain corn production because more folks decided that they had so much silage from the year prior, enough from this year, along with other forages, based on how ideal weather was in certain parts of the Midwest, that there might be actually more acres of grain corn out there as a result. So that in itself, I think, is going to be really interesting. And that gets into the wonky elements for those of us watching the balance sheet as we move through the balance of fall here in the U.S. But we're going to be looking for things like that. Can production actually grow even though you reduce yield, let alone what you do with the demand side? And Jake, you pointed out we're kind of flying bit blind here on the demand side, but one could see corn ending stocks elevated and potentially at 2.2 billion bushels, potentially even a little bit higher here. So there's a couple levers to be pulled by the USDA. You know, Jake, I think the big storyline as well, of course, has been beans. What on earth are we actually selling in terms of soybeans to the export market? We've really beat up this dialogue about, hey, there was a deal, right? Hey, we made a deal with China. They're going to buy 12 million metric tons of beans. No deal was signed. We're not seeing these sales commitments from the government because it is closed. Inspections are down. That's another one agency that was open, was the AMS. We release export inspections. So that's not our commitment. That's what's physically leaving port from this country. That is still being tracked. And inspections are down. I think I saw they were down 40 to 45% year on year, through last week. So it doesn't feel good. It feels like commitments are going to have to really pick up, and that inspections are going to have to really pick up in terms of physical movement over the next 6 to 7 weeks. Because usually, Jake, we have shipped, half of our beans out of this country by late December, right? So, we harvest in the fall. Big soybean buyers like China come in and say, we want those delightful and perhaps cheaper beans because they're fresh out of the ground. Buy, ship, ship, ship. And we're just not seeing that this year. And so it's a dialogue we've been beating up a lot. But now that WASDE is in front of us and the government numbers might be back in front of us the next week or two, it's going to be magnified. How do you see that impacting the market, Jake, in terms of those bean numbers and then inherently impacting, protein and soybean meal for the dairy farmer?
Well, I think we're starting to see this develop in front of us, and it just takes a little bit of time. At the end of the day, what we have accomplished appears to be a handshake deal with a trade partner in China that, if you've been in this industry for any amount of time, you know that you believe what they do and not what they say. And what they said is they were going to buy beans from us. And thus far, what they've done over 2 weeks now of this agreement is buy significant volumes of soybeans from South America for the shipment window that we thought we were going to fill up. I think those outside of the everyday trade of this industry are starting to catch on to that. I think it could be printed in black and white numbers potentially on Friday or very shortly after, when we start to get some more of these reports coming online again next week, that this deal is not materializing the way that it traded the first couple of days after it was announced. And that's going to leave a pretty big hole in the demand side of that bean balance sheet. That probably brings those futures back down to earth pretty quickly. Ideally, as a feed buyer, it brings soybean meal back with it, those input costs coming down. And then you start to wonder, okay, can we get all the way back down to where we were? Where's the next stage to start buying the rest of our needs for next year? Because South America is in the middle of their planting season right now, and they are cruising right along with pretty ideal conditions. So, if we don't start getting some beans out of here pretty quickly, I think we can certainly go back and revisit the numbers we had an opportunity for prior to this shutdown. And who knows, if they get into their growing season looking the way that they are right now and actually start to trend towards the production estimates that have been floated around for the last several months, South America could put us out of business for another long stretch of our marketing year, and this thing could get to some new values. I think the numbers we're seeing out there right now are still very palatable as a feed buyer. We've had a lot of folks manage their risk early on. There's opportunity to create additional flexibility, capture more opportunity right now. This thing seems to have stalled out, at least for the short term. But there might be even more opportunity on the horizon. I think it has to be managed very well. China doesn't typically buy the highs. They can often influence their way to the lows, but then when that occurs, they're pretty quick to act and it's gone. So we got to remain vigilant, be proactive as this thing starts to shift, because I think it's going to be moving quickly as data starts to come back online.
Yeah, Jake, you nailed it. That China does not historically buy the high. They historically do not chase rallies. I would say this is an inopportune time for them to step in and suddenly commit to a significant amount of commitments at these levels. Now, we heard some discussion, around the market. Maybe they were stepping into own futures, and maybe that was going to be a substitute for physical purchases for now, and then ultimately swap those out for physical later. I think it's very difficult to confirm that. What we can confirm are the headlines we've seen, as you noted, Jake, from South America. There are numerous commitments daily or weekly about new commitments out of Brazil, out of the big commercial entities out of South America. The Chinese are buying from them, are arguably covered through the end of the calendar year at this point already. And so, like you said, Jake, our export window in theory then would be closed at that point, which is discouraging for the row crop farmer here. But you also noted it does give us some potential here, I think, for the dairy farmer and for those feeding, grain and protein, that there could be more opportunities here. And, sticking with South America, there is a, mild La Nina event, but it also feels like things are pretty okay down there. They've had a pretty solid amount of rainfall. Brazil is to get some more, any of that La Nina-esque, extended dryness and heat periods have not really come to fruition. Planting progress seems to be pretty strong. So it's just going to be really interesting to see how their weather holds up throughout the rest of, their planting period down there, and then early development periods. And we'll see what happens here in the States. There's going to be a lot to talk about on Friday afternoon. That's for sure. It'll be good to see some actual data come through, and then we'll digest that and move forward through next week, Jake. So until then, Jake, thank you very much for being with us today.
Thanks for having me again, Jim.
You got it, bud. We'd also like to thank Michael and the Ever.Ag Insights crew for their support. Thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That is all for today. We will see you next time on the grain feed.